Good morning, everyone. This is Charalambos Pissouros, senior analyst at IronFX, bringing you the morning comment for the 18th of April. Oil tumbles after Doha talks fall apart. Major OPEC and non-OPEC oil producers failed to strike an output freeze deal on Sunday as Saudi Arabia reasserted its demand for Iran to join in for any freeze agreement. This came as a surprise to market participants, especially given last week's rumors that a deal would not necessarily depend on Iran's participation and caused oil prices to open with a large bearish gap on Monday. The lack of a deal, combined with the fact that Saudi Arabia and Russia have ramped up their production near record high levels in recent months, may signal the end of the recent rally in oil prices. We expect that the hate and uncertainty around the oil outlook is likely to weigh on energy-sensitive currencies in the foreseeable future, such as CAD and NOK. On the equity frontier, European indices gapped down as well, led by losses in energy firms that had gained in recent days on expectations of a freeze deal. We expect this risk of sentiment to roll over into the US stock markets, something that could keep supported safe haven assets like the yen and gold. Now investors' gaze shifts to the next OPEC meeting scheduled on the 2nd of June. Nonetheless, we do not rule out an earlier emergency meeting given the willingness of most members to find a solution. Overnight, data showed that inflation accelerated in New Zealand during the first quarter. The headline CPI rate rose to 0.4% year over year from 0.1% as expected. We expect that this could take some pressure off the bank to ease again in the near term as concerns of a possible slip into deflation may now begin to subside. The Kiwi gained on the news and may gain even further heading into the RBA's policy meeting next week. As for today, we get only one US indicator. The NAHB housing market index for April is expected to have risen slightly, but this is usually not a major market mover. We have one speaker as well, Minneapolis Fed President Neel Kashkari. As for the rest of the week, on Tuesday, during the Asian morning, Australia's RBA will release the minutes of its April policy meeting. Given that the bank remained on hold and simply reaffirmed its data independency, we expect these minutes to pass relatively unnoticed. From Germany, the ZEW survey for April is forecast to show an increase in both the current conditions and expectation indices. We believe that indeed this could be the case due to a considerable improvement in the global outlook during recent weeks. On Wednesday, we get the UK employment report for February. The unemployment rate is expected to have remained unchanged, and average weekly earnings are forecast to have accelerated somewhat. The forecasts are supported by the services PMI report for the same month, which showed that employment growth slowed to a 2.5-year low, but average prices rose mainly due to gains in salaries. On Thursday, the European Central Bank will meet to review its monetary policy stance. We expect the Governing Council to remain on hold in the aftermath of the surprisingly aggressive dose of stimulus injected in Eurozone's economy at the March meeting, as some of these measures will not be implemented until June. We don't get any updated forecasts either, so we expect that the reaction in the euro is likely to be determined by Draghi's comments in the press conference following the decision. In Sweden, the Riksbank gathers to decide on monetary policy as well. Having delivered a more aggressive than expected rate cut at the previous meeting, we expect officials to stand pat in April and monitor the effects of the prior measures. What is more, inflation accelerated in March, something that could ease pressure on the bank to act again in the near term. Finally, on Friday, we get the preliminary manufacturing and service sector PMI data for April from several European countries and the Eurozone as a whole. From Canada, we get the CPI data for March, and expectations are for a slowdown in both the headline and core figures. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.